Glad to have you back. Well, let's continue the discussion, but this time, a capital inflow into the country. It fell from like $620 million in July to $440 million in August. Well, over the resurgence of COVID-19 pandemic, according to its monthly economic report for August, the Central Bank of Nigeria stated that foreign capital inflows moderated in August 2021 due to weakening risk sentiments that followed the COVID-19 resurgence, while new capital imported into the domestic economy decreased by 29% to $0.44 billion compared to $0.62 billion recorded in July. According to the CBN, a further analysis of capital imported based on nature of business showed that the bulk of the capital was channeled to non-share activities, with production manufacturing accounting for the largest share of 36.5%, followed by banking with 24.5%. And to give more insight into this, I introduced him earlier. He's the head retail investments, Chapel Hill, Denham, Mr. Ayodeji Ebo. Good afternoon, Mr. Ayo. It's really good to see you this Monday.
Good afternoon. Thanks for having me.
Yes, Mr. Ayo, let's do an overview of this report before we go into some basics. Capital inflows dropped by 29% as COVID-19 cases rise. To me, I would say the Omicron variant is just in recent times we started seeing a little bit of surge. But how has this dovetailed? How did we get to this point? 29% is something that we should be worried about.
Okay, thanks. And you made a very valid point. The report was or covered the period between July and August. So the issue of the new variant, Omicron variant, will not arise. So what we have been seeing, looking back to last year, because of FX illiquidity, we began to see reduction in terms of inflows as we saw that a lot of foreign investors were trying to pull out. And that sent a bit of negative signals to potential investors. But beyond even FX liquidity, insecurity is a major issue. Investors don't like uncertainty. So looking at the report, you would see that the FPI that we were even though reduced about $400 million, what we're even able to attract is still continue to form a major part of the total capital inflow. The FDI is what adds values to the economy. FDIs will provide that liquidity flow. They are hot money, and we need more of the FDIs. FDIs reduced to about 0.4 or $0.04 billion, and you can see that means that a lot of investors are looking away from Nigeria, despite the market. You know what you would expect, that most investors will want to set up their factories, set up businesses closer to market. We call it proximity to market. But in light of the insecurity, and sometimes you see the policy flip-flops, has sent a negative signal to a lot of foreign investors. And some of our neighbors are taking advantage of this. The likes of Ghana, you would see that they are trying to position to attract a lot of these foreign direct investments. So a lot of companies are being set up in that country. And when you look at their own population, it's not even as much as Lagos State. So the ultimate objective of setting up there is also to bring in the product back to Nigeria. So there are a lot of issues that are discouraging foreign direct investment. You also want to talk about the multiple taxes. You want to talk about the cost of doing business. So you want to look at even the telecommunication space. You look at the right-of-way issues for some of the fringe players within that space. You also want to look at even the top guys, top telcos. For all of them have to have like minimum of 2 generators to 1 base station. So that increases their cost. And if they are able to identify countries that costs will be lower, and they would also just consider importing those goods importing goods to Nigeria, then they will may prefer to have that, stay in those countries that have that stability. But the downside is that we're all complaining about high unemployment rate. If these companies don't set up, if we don't attract sufficient FDI rather, that's foreign direct investment into the country, unemployment rate will remain high. And if we don't solve the issue of unemployment, insecurity will continue to be a major concern. And lastly, on this, it's also that it's very obvious that government cannot solve this problem their own. There's the need for private investment, either domestic or foreign. And now our focus today is on the foreign investment. So there's a need to rejig some of the what we call the ease of doing business, to see how we can continue to intensify effort to make it more accommodative to foreign direct investment, while we also take care of a lot of the insecurity issues within the country.
Okay, now bulk of the capital was also channeled to non-share activities, manufacturing, production, accounting for the largest of 36.5%, followed by banking for 24.5%. How does this come to you? And this also takes me to, it's a two-in-one question. What's this level of talking about our FPIs and FDIs now? At the time, I think FPIs were doing more than even the FDIs. Where do we stand at the moment, Mr. Ayodeji?
Okay, thanks. Based on the reports, FPIs, that's the portfolio investors, continues to dominate. They're over 50% based on the latest reports. And looking at the FDI is really, I think, is around 4% based on that report. So when you look at the other investments, so you spoke about manufacturing sector attracting significant share of the investments. But what we can see is more of loans to some of the subsidiaries of some of these foreign companies. Yes, it's a form of investment, but most of these foreign companies are trying to support their subsidiaries. So I wouldn't say we are seeing much of new businesses trying to set up, and these businesses are attracting significant inflows into the country. So I don't think it's something to cheer about. There's still a lot that needs to be done, especially regarding the FDI. The proportion is still less than 10%. That is the fact. That is that portion that would impact Nigerians. That is the portion that will create the jobs that we desire and will also help us bring insecurity to a reasonable level.
Even by country of origin, the UK remains the major source of capital inflows. Now, with all of these restrictions that we have in place, and of course, the Omicron variant and what's happening, what effects do you see this having future inflows that we might be expecting?
Okay, thank you. When looking at Nigeria as being a very strong partner of the UK, and they understand our market, despite the very evident risks that we can see in the market, because they have been in this market for long. They believe that there's opportunity. So, despite the high risk, we know that the UK has continued to invest in the country. But though I may not be able to state the exact amount, but looking at even the total foreign direct investment from that angle, the portion of the UK would definitely be significantly lower than the 10% level. So we need more. We need to attract more investment into the country, and we need to do everything possible to see how we can make them stay. We need to be a major attraction within the African space. Egypt positioning, attracting a lot of investment. You look at the oil and gas space, most companies, most of the foreign, the multinationals rather, are trying to divest their investment within that space. Recently the PIA, that's the Petroleum Industry Act, has been passed, and it's supposed to attract more investment. But when you look at what is happening, it's some of the multinationals that have been in the country for a long while are also trying to divest. The major reason for that is also looking at the insecurity within that space and some of the policies flip-flop that we continue to see within that space. So there's a lot that needs to be done for us to be able to attract foreign direct investment. For most countries, the likes of the UK, US, UAE, for some of them, because they understand to a large extent this risk and they know how to play around this environment. We'll continue to see their participation, but it won't be very significant and it won't have much impact because this is, when you look at the economy based on our size, based on our population, we need significant investment for us to be able to bridge that gap. When you look at infrastructure, there's the gap that we need about $1 trillion every year for us to be able to bridge the gap. So if we are getting less than $4 million in FDI, so when are we going to be able to bridge this gap? These are the major concerns that should be looked into.
Let's wrap up on this thought. We can do this in 2 minutes. Issues of repatriation and capital and dividends. I'm looking at that. Is that also does this affect inflows in any way? Because repatriating funds becomes very important too for business people.
Yes, definitely it sends a very negative signal. So you see your contemporaries or you see funds being trapped in the country due to illiquidity of the FX. So it means that they will be wary of transferring more or bringing in more funds into the country. So it has a major role to play, and that reduction in FX supply is one of the major factors that has led to the decline that we are seeing, coupled with the insecurity in the country. So it's important that we try to see how we manage their exits. We know it's also there's that volatility that comes when sometimes the foreign investors are trying to exit the economy, but we need to manage to provide that confidence so that it will be easier for us to bring them back into the country.
Let you go. I'm going to hold you on a bit because let's quickly look at the markets now. Before I let you go, let's just do a brief overview of what's been playing out. Last week was like 2 days negative, 3 days positive, and all of the ups and downs that is a regular feature in our markets. What's your overview of that market as we wrap up the year 2021? Many say there could be a lot of sales for cash. Some say you play in this market. What are your expectations and what's your assessment of the present position at the Nigerian exchange?
Okay, thanks. I think the market on its own, we can't isolate the market from the economy. So when you see consumer wallet being constrained, and you would see that there will be a reduction in participation. So when you look at the activity in the market, you would discover that retail investors are playing. I think they are playing around the activities around 70 to 80% compared to what the foreign investors are doing. So though that has created some stability in our market, but there's a need for us to see how we want to bring in more people to stabilize the market. But let me go into exactly what we're seeing. So that this volatility is being caused by a lot of even the foreign news, expectation that of how much impact will the new variants have on the market. For investors, despite that, they are trying to identify stocks that are trading at very cheap valuation and trying to take position ahead of full year results. You know that we're going to, in the next few months, we'll be going into the corporate action season where dividends or bonuses maybe will be declared. So investors are trying to position in those stocks that have been very consistent. This year has not been very interesting. Year to date, market has returned about 4%, but there are also some stocks that stood out, the oil and gas sector, because of the rally in the oil and gas space. You also look at the industrial goods sector, the cement industry, also the telecommunications sector. So those sectors have stood out, while even the banking sector has been mixed. And also looking at the consumer goods has also been very challenging for them. But by and large, we believe that this market, this is the time, it is the time to take opportunity for long-term investments. If you are investing and not trading, because we believe that the economy improves, and as we begin to see maybe in the next 1 or 2 years, foreign investors come back to this market, prices of these shares will increase appropriately.
I think trading is closing positive today. With the figures we have in 1.62%. Gainers we have MTN, Mayan Baker, GSK. Losers we have O&O, Champion Breweries, and a few others. How do you react to trading for the day?
Okay, thank you. And based on the gainers, you mentioned MTN, and you know currently MTN is currently selling its shares to retail investors and expected to close tomorrow. So we're seeing activities from two angles. Because of the price in the market, some investors are going to buy the secondary market, but we know the shares there are limited. So we're seeing a lot of interest from retail investors. The kind of interest we are seeing, the last time we saw that was in 2008 in our market, trying to show interest in investing in MTN shares. It's going to close tomorrow, and when you look at MTN has very strong fundamentals. In terms of dividend, they pay out about 80% of their profit to shareholders, and there's a lot of opportunity for expansion in terms of revenue from data, revenue from their payment service bank, and we believe that it's really a very strong buy. But investors should understand their risk appetite, should also understand their investment objective. This is a long-term play, you shouldn't buy for short term.
Well, it's a good way to leave it there. I've been speaking to Head Retail Investments at Chapel Hill, Denham, Mr. Ayodeji Ebo. Thank you so much for helping us shed light not only to the capital inflow story, but even activities at the